defending the free market, and making the moral case for capitalism. The Justin Moore Show. Hey everybody, welcome to the Justin Moore Show, where we make sense of what's going on in this crazy, insane, out of control world. And now, ladies and gentlemen, I'm recording this just before I leave and go on my little adventure to Singapore. I'm still not exactly sure all the things I plan to do. Like I might try to go to a few other countries after Singapore. I'm not sure. Work out the details later on that. I mean, you gotta be spontaneous, you know? You just can't have everything all planned out. Then it's, you got to keep things fresh. And when you're flying standby, that's what you can also do. You don't have to have an exact, planned schedule. You just fly out whenever you feel like it, which I've had to work out days off and so forth. I gave myself plenty of days off so I can kind of tweak what I want to do within those several days. So anyway, guys, I was thinking about, what should I record here before I take off? And, looking at with the markets, what the dollar's been doing lately, looking at gold, the big talker on the water cooler, at work or wherever you're at, cryptocurrencies. So I think let's just kind of explore those three things. We have gold, the dollar, and cryptocurrencies. Where is a good place where you should have your money in 2018? What is the safest bet, or what is the best bet? What has the best probable return on your capital? And, so I'm scouring through all the news, and I don't know. I think I've come up with an answer, but you guys are going to be like, oh, Justin, we already know what you're going to say. But, okay, hear me out before I say my answer here. Let's just look at what's been going on lately, okay? So right now, looking back at 2017, the stock market hit 71 all-time highs. That's the most it's ever hit in 1 year. So it hits and it has a new nominal high for the Dow. Then it breaks it. So that's 2. Keeps breaking it. It broke it 71 times. The Dow went up 25% in 2017. And just to kind of put that in context, for people who don't exactly follow the markets. Okay, get this. So it took the Dow 14 years to climb from 10,000 points to 15,000 points. Okay, so it's an increase of 5,000 points, right? But with the stock market today, in just 3.5 years, the Dow went over 20,000. So what it took 14 years to do, it easily did in 3.5 years. And now what? The stock market's over 25,000 points. I mean, that's insane. How things just keep going up and up. And so when people look around, they're like, well, Justin, why are you investing in gold? Or, everyone, the big talk is it's either the stock market or it's cryptocurrencies. There's no one talking about gold. But anyway, before I get over and tie this in with gold here, okay, let's continue on here. Okay, yeah, Dow went up 25% in 2017. We have consumer confidence. It soared to 17-year highs. We have maybe a lot of people are getting their confidence from Donald Trump being in there, and we have a businessman in office now. He knows how to run a business. Trump International, how that's been such a success. The Trump name. Well, here's the thing. Okay, looking at the stock market. Okay, yeah, it's great. It's gone up that much. Now, indirectly, a lot of people you are making money through the stock market as it's gone up. Because, through your employer, if you have some sort of retirement plan, you're doing well with how the stock market's been returning here over this last year. But look what happened in 2007, 2008. People who had their money invested in these pension plans, you think, oh man, I'm sitting on all this money. This is great. Well, you saw people lose half their retirement during the housing crisis. So just because you have it now doesn't mean you're going to have it when you retire. But then if you actually look at, okay, how many people are actually investing in stocks directly? Well, coming from CNNmoney.com, they found out that 18.7% of taxpayers, they own stocks directly. So that's people like, say, me, who have personally invested money. I personally own, some gold, silver companies. In the past, I owned Microsoft. I sold that for an 80% profit. I owned Johnson & Johnson, sold that for around 86% profit. So there's other companies I've owned besides gold and silver, which I guess if I would have held on to those, I would have made even more money. But most people out there who are taxpayers, they don't directly own stocks. So they're not getting this windfall from this huge stock market run. And so then you can have the liberals out there, they can be arguing, well, see, all this with the stock market, this is contributing to the wealth gap, which I don't give a crap about the wealth gap. That's not an argument I'm going to make because that doesn't matter. As someone's getting richer does not mean you are getting poor. That's not how it works. It's not a zero-sum game like the Keynesians and like liberals and Marxists and communists, socialists, like they want you to believe. That's not how it works. But now you can complicate the issue when you bring in some crony capitalism and the government's favoring certain businesses because of how they contributed to the certain politicians who voted for the plans that support those businesses. So that makes it a lot more of a cluster. But still, at the end of the day, as someone is getting richer, it is not making you poorer. So we have an increase in consumer confidence out there. We've seen, if you go back and you look at the core consumer prices, we saw the largest increase in 11 months. They've risen 0.3%. You've seen retail sales in December, they went up 0.4%. So based on all these indicators, it's like, hey, look, the economy is doing well. What are people like Justin thinking? What do you mean we're not in a recovery? This is awesome. We're doing great. Trump is making America great again. Okay. If that's what you want to think, and it's funny, a lot of these, especially supply siders, they always get thrown off by this. You just get them a little tax plan out there, you get that passed, and these guys get so giddy, even though before maybe they were predicting a collapse. Oh no, you got a tax bill through, everything is fine. Oh yeah, government deficits, they don't matter anymore because we got a good tax bill, which the tax bill really isn't that great. Now, I've told you guys before in the last few episodes that overall, I think the tax bill that was recently passed under the Trump administration is better than not having it passed. But still, it's a huge cluster, and it doesn't really solve too many problems. It just helps out marginally. That's all it does. So anyway, with these supply siders just going all sort of giddy about all these, what they think are these massive tax cuts for everybody, and this is going to spur economic growth. Okay, to a certain extent, we're going to see some growth from this. That's true, from the tax bill, and how it's trying to incentivize and get businesses spending and investing money in the economy. That's great. We want to see more investment. That's definitely something that the Obama administration could not figure out. He wants to grow the economy. He wants to help out the poor, but at the same time, he wants to attack businesses, which businesses are the ones who create jobs. So, and then he's under the Obama administration, when we had the jobs bill, we have all these bills. All Obama did during his administration, they just increased and just created new programs and thinking that's going to help grow the economy, which of course that does the exact opposite. Because now you have the government spending money. You have the government taking money out of the private sector, the government spending it in the public sector. And I've said this many times on this show. What does that mean at the end of the day? Well, the government is now going to be much more inefficient than the private sector ever would be with that same money. The best the government could possibly have would be a wash, but that ain't going to happen either. So it was a net loss for the economy with everything that Obama was doing. We have a tax cut. That's great. What could we see from this? Could we possibly see increase in productivity? Could we see more jobs created from this? Certainly, we could. It still is adding to the national debt. We're still not seeing a cut in government spending. Hopefully, I guess I've heard Paul Ryan talk about, well, now that we've got this tax bill through, we've repealed the individual mandate from Obamacare, now it's time to get serious on cutting spending. Okay, I think that's all a bunch of talking points. Are the Republicans really going to cut government spending in any sort of meaningful way? That's doubtful. Based on their past, they never do it. So, if they do happen to cut spending in a meaningful way, you guys are going to see me golf clapping over here. I will. Just like with Trump. I gave Trump so much crap before he was elected president. But the little things he does right, hey, that's awesome. Good for him. Trump is, I don't know, he still is. A lot of people are bamboozled by him and what he's doing. But I guess a lot of what Trump does, I guess I just laugh at, because I think his personality is like he just likes to have fun, whatever he's doing. And he will say some outrageously stupid things on Twitter, but he also recognizes that they're stupid. I really don't think he's completely serious about it. Like, when I started last week's show, I'm talking about how, Trump, he's saying that his nuclear button's bigger than Kim Jong-un's. I mean, that is really funny stuff. I think that's hilarious. And one thing I learned a long time ago also is not to take politics way too seriously. You're just going to make yourself depressed, and you're going to feel like everything's just going to hell. I mean, I guess I do think a lot of things are going to hell because of the way the politicians are, but I do. A lot of the stuff I see out there, what these politicians are saying, I just laugh at it. There's nothing I can do to control them. I didn't vote for these damn fools who are in office, and they're the ones destroying the American way of life or making it worse and worse and worse. The best you can do is try to manage with the cards you're dealt. That's all we can do. And that's why later on in this episode, I don't even know how long I'm going to go here. I might conclude it here soon. I don't know. But a way that I've learned to get away from and basically have insurance against poor policy by government officials, by politicians, is owning gold, owning silver, owning physical precious metals, owning these mining stocks where they will go up when you have an incompetent government. If there's a huge collapse like I think there's going to be, gold and silver are going to benefit from it. And also look at with the stock market too. Okay, yeah, we saw a record high. We're still at a record high right now. We saw 71 times the Dow broke records. Right now, the bull market in the stock market is at about 9 years old today. That makes this bull market the second oldest and the second strongest in history. And so with all these things that I've said to start off the show, what I just said there, talking about consumer confidence, 17-year highs, you basically, essentially looking at the government numbers, you have full employment, looking at all that. If I was just looking at that, if I didn't understand anything I did about Austrian economics and how things work and the bubbles in the economy, I'll look at this and be like, man, yeah, this looks all great. I think we are set up for an amazing several years. And the economy really is improving. But what I've learned over the last several years, trying to understand this stuff, how the economy really works, that isn't the case. What this tells me is that right now the stock market, it's overvalued and it's set for a huge collapse. That this is just one of the many bubbles out there. And then when you look at over at Bitcoin, one of the cryptocurrencies, right now it's sitting at $13,800 per Bitcoin right now. Okay, its record high was around $20,000. So it's really pulled back. I mean, just Bitcoin in one day, didn't it go down like 40%? Could you imagine if you were a Bitcoin millionaire, you owned $1 million in Bitcoin, or because of how fast it's gone up. Now imagine with that 40% pullback, you now went down. Now you only own $600,000 in Bitcoin. So a person who maybe you were just middle class before, you're sitting on $1 million. You're like, oh man, this is essentially like $1 million in savings. Life is good. I can go buy a nice $100,000 car. It's only a tenth of it, blah, blah, blah. But then just in that one single move there, over a period of several hours, you've lost $400,000, which maybe before that would have been equivalent to, say, 10 years of your earnings at your current job or your former job. I mean, that's a lot of money for someone to use in the stomach when you see fluctuations like that. Like that's crazy. So, I mean, certainly in 2017, we did see the rise of Bitcoin and cryptocurrencies. They've been talked about all over. You turn on the news, you can't help but run into someone talking about cryptocurrencies. And I've discussed cryptocurrencies before. I definitely see there's a form of value with the blockchain and so forth. And I do like the certain things that it's doing in terms of competing currencies. I mean, there are a lot of good things with Bitcoin, but I see it as a huge speculation. And with me, the way I've been looking at things, the way I've invested for several years now, which so far for the most part, hasn't turned out. I mean, yeah, there's some stocks I've made some good money, so forth. But is where I have my money and where I think is going to be the best place to have your wealth in 2018 is to own gold, own silver, own gold and silver stocks, the physical metals. I think it is finally set up for a huge takeoff. You look at the value of the dollar. Now, keep in mind with the dollar, it typically trades inversely to gold. So you saw when we found out that he was going to be the next president of the United States, we saw the dollar rally. We saw the dollar up over $103 on the dollar index, right when Trump's become president, and right before his inauguration. And I was saying at the time, go back and listen to this episode. This is before he was sworn in as president. It was probably the first or second week in January. Just go back, listen to this episode. I remember exactly what I was saying, talking about everyone is so giddy about the economy and just pointing out, and I'm saying, hey, look, could it run a little higher? Yeah, but Donald Trump, everyone's so giddy about him because they think he's going to cut all these regulations, which to a certain extent, he has been cutting regulations compared to what Hillary Clinton would do. But still, all things considered, he is very status quo with some decent tweaks that certainly make him better than Hillary Clinton. With the tax bill, repealing individual mandate. But it's all just marginal. He's not draining the swamp like he said he would. Not even close. So everyone had all these high expectations based on this sort of false prophet that was Donald Trump as he was on the campaign trail. And we fast forward a year now. What is the dollar index at now? Okay, around when he was sworn in, it was around $100, $103 of the dollar index. Now, the dollar index, the way they figure that out is based on a basket of currencies. So it's got the euro, it's got the pound, it's got the yen, and one or two other. I can't even think of it right now. But this makes up this basket, so it determines, how strong is the dollar compared to these basket of currencies. And right now, the dollar index is right around 90. So the dollar has dropped in the last year basically 10%. So we've seen the dollar drop. And you know what happened with gold last year? Even though, how many of you out there were you talking about gold? Or did you know someone who was talking about gold? Well, gold last year, gold was up about 12% last year. That's really not bad. All things considered, when you saw the stock market going up 25% and always hitting new highs, then we also saw it competing with cryptocurrencies, making 10, 20 times your money with those. So there's a lot of competition out there. And to help put this, where the gold price is right now into context, gold right now is about $13.40 an ounce. Last year, if you were to average what the median price was for gold, it was around $12.57. And so most of the year, in 2017, you never saw gold go above 1,300. A few times it did. It did hit a high back in, I think it was August, September. We saw gold go to 13, it was at 13.57, but that didn't last long and it pulled right back. Well, right now we have gold, at 13.40 an ounce. If it breaks that 13.57 barrier, that is definitely very bullish for gold. Now, am I saying that, it's going to stay above 1,300 from here? No. You could see a pullback. It could pull back below 1,300 for sure. But it's definitely looking very bullish. And if you just go back on the gold chart, look at what gold has done in 5 years. 5 years ago, the gold price was over 1,600. It was about 1,680 an ounce. So we are at levels 20% below where gold was at 5 years ago. So the question you have to ask yourself is, 5 years of what the government's been doing, spending money, the quantitative easing, which they're not doing anymore right now. But you just look at all the government largesse. Have we done things in a meaningful way to prevent this crisis from coming from these last 5 years? Did we do anything? Did we balance the budget? No. Balancing the budget means you're not adding to the national debt. The national debt right now is at $20.6 trillion. Balancing the budget would mean, oh, wow, we balanced the budget in 2018. That means the national debt is still at $20.6 trillion. That is all that means. And so we can't even do that. We just keep adding to the national debt. But it's the supply siders out there. They think, oh, you just have this good tax plan. You're going to see all this growth. Debt doesn't, the national debt's no big deal. We're going to be able to grow out of it. You can't grow out of a $20.6 trillion national debt. The only way out is going to be through inflation. We're starting to see inflation tick up now. We're seeing treasury yields being pushed up, which for those of you out there who don't really understand how the treasury market works, as treasury yields go up, like say right now the 10-year treasury is at 2.55%, and it hit a record low. I think that was last July when it was at about 1.3%. Okay, so we have treasury yields at 2.55. Well, what does that mean? That means as people are more confident about the economy, as people fear, say inflation rising in the economy, or they see that they can better allocate money somewhere else, they don't need a safe haven. They start going to other things. So the treasury yield is going to reflect, okay, hey, we got to encourage people to buy treasuries, so we need to have an increased yield, so people will want to buy it, or it's also competing. So I mean, it's kind of a mixture where you could say, well, the 10-year treasury is going up because of our growing economy and the economy's looking spectacular. But there's also, if you figure in, remember what the basket of currencies that creates the dollar index. Well, as we're seeing, what we're hearing over in Europe with the EU and over in Japan, these guys have been super easy on money compared to the United States. The United States, the last 2 years, we've actually been raising rates. All these other countries haven't. And so if these other countries start to raise interest rates, well, now people are going to be like, well, there's better options out there with my money. I can get better yields elsewhere, maybe with the euro or the yen or in these other countries. And people are getting more confident. But the way markets work is that there's huge fluctuations with them. And the reason, and most people end up losing money in the markets because they get giddy at the wrong times. Like right now, should you be owning treasuries? Hell, I wouldn't. Especially when, based on what I know about things, the government is going to have to print its way out of this mess. It's the only way out. We can't grow ourselves out of this. And so we're seeing treasury yields tick up. What do treasury yields ticking up mean for the average person out there? Well, that means, say you want to buy a house, say you own a house, you have adjustable rate mortgages, ARMs, you're going to see your interest rates tick up. Oh, you thought you could afford your house payment? Well, what happens when those keep ticked up because of treasury yields being pushed up? Now, right now at 2.55%, historically, that's still a pretty low treasury yield compared to what it was. Usually you see, 4 or 5% treasury yields. So we have quite a ways to run. But what else will that do for all these other things in the economy? This economy that's like the drug dealer that is so addicted to 0% interest rates. What happens as this treasury yield gets pushed up? This treasury yield going up, this is what I've been talking about with when, Janet Yellen and how she's been pushing up interest rates. This is the pin that's getting closer and closer and closer to the bubble, and it's ready to pop it. So as these treasury yields keep getting pushed up, eventually that's where, okay, right now, if I could just back up for just a second. When you look at the economy, say, if you go back to 2008, okay, the Federal Reserve's response was, okay, let's print a bunch of money. Let's have the QE1, QE2, QE3. We're going to add liquidity to the system. So this is essentially putting the Band-Aid over, like a hole in the Hoover Dam. But you're thinking, okay, maybe this will work. But it seems like it's worked from what we've seen. Look at the stock market. People would argue at me, Justin, what are you talking about? Everything's great. But it's not, because if you understand how things really do work, okay, we printed $4.5 trillion out of thin air. Okay, at the end of the day, that does devalue what all the other dollars that are out there. But what's the reason we haven't seen a huge devaluation in the dollar like we should have? Like many Austrians argued, there were many Austrians out there who, they kind of feel like they got discredited a little bit, thinking that there was going to be hyperinflation many years ago. But there's always so many factors. You're in a complex system. It's a complicated economy. The way things trickle into the economy and out of the economy, it's really hard to predict exactly when that stuff will happen. But I still think it will happen. We will see hyperinflation. But what all this extra liquidity has done, well, a lot of it really hasn't been in the economy. These banks took this money from the Federal Reserve. They stored it at the vault at the Fed. They earned interest on that, the money that was printed from the Fed. So for the banks, they're like, oh man, this is awesome. Zero risk, zero risk and they get a, let's say a 0.25% interest in return for that. It's like, man, this is a good gig. We don't even have to work for this. And so that money was being kept out of the system because the banks were they'll gladly take that extra income with no risk. Hell. So, but now as we're starting to see, as this tax policy, if it does do what the supply siders think, if we do see huge growth potential from it, what does that mean? Well, huge growth, that means, okay, more people may going to start businesses, or there's going to be a lot more investment out there. Well, now all this liquidity that I guess you could call it, maybe it was excess liquidity that hasn't been utilized. Now that's all going to start pouring into the economy. Well, eventually we're going to run into that point where all this liquidity that was created out of thin air from the Federal Reserve, that's not going to be enough. So you're going to have the guy who is in the middle of building his project, and we run out of that liquidity. It's not there. So then you see interest rates start spiking up. So then you'll have responses from the Federal Reserve. Okay, well, what should we do? We can't have interest rates go up. No, we're still in the middle of recovery. We don't want to risk the recovery. So what will happen at that point? Will we get QE4? They don't want the bubble to pop. So there's going to have to be more QE to keep it going. But all that does, it's just like what happened with QE1, QE2, QE3. QE2, QE3 were the response because QE1, that liquidity wasn't enough. So we're getting to that point where the bubbles are becoming a lot more evident with just how high and astronomical all these levels are going to. It's really amazing how most people don't see any of these things as bubbles. Look at the auto loan bubble, the bond bubble. The bonds have been in a bubble for 35 years. You got the dollar bubble. The dollar has lasted a lot longer than most of us thought. The dollar's been fiat currency since 1971. What is that, like 48 years of it being a fiat currency? I mean, that's a lot longer than I would have thought it would have lasted. So you got to, I guess, applaud the government for doing that. But what's happened with all this printing of money, the way that enters the economy through the banking system, through government-favored businesses, all of that liquidity, all that printed money has replaced real savings in the economy. And that money is used to fund government projects. When this artificially created liquidity from the Fed, when this has gone to support government businesses, we look back at 9 years, is that making our economy more productive? Is there really growth from that? I would say no, that we've had a huge misallocation of resources. Resources are not going to where they should have been going. But the government, through printing money, creating this liquidity and favoring these certain businesses with the government connections, it's allowed some entrepreneurs out there who had maybe great ideas. They had great businesses, but they failed because the government stepped in and they essentially sucked up the liquidity for their own use. And so this is making our economy where it's got to get rid of all these bad investments. So eventually there's going to have to be a crisis to clear all that out. A recession is going to be beneficial. It's what we need. If we want to have a true economy, well, you'll be able to see me on my show here, and I'll be able to say, oh man, the economy, it's doing great. Things are looking up. This is great. We actually have a strong foundation for once. I mean, one way, if you want to have an economy with a strong foundation, you got to have an economy with a gold standard or some sort of currency that is as good as gold, and that can't be manipulated by the government. That can't be printed. Now, some libertarians out there argue cryptocurrencies. I can't really see it replacing gold in that way. But again, I'm not going to get into that. But I do see a benefit to cryptocurrencies. But I still see a benefit for gold and silver. And we look at all this evidence that I've pointed out to you guys. You guys need to ask yourself a question here. Okay, based on the stock market and all that, do you feel safer having your money in something that's been going up and up? It's hit record highs last year. It's going to continue at record highs. Or would you rather buy something that we've known has been seen as money for thousands and thousands of years, that's been beat to hell since 2011, where it was almost at $2,000 an ounce, and now it's around $13.40 an ounce. So still not even at its record highs as it was at back in 2011, 2012. I mean, hell, just for silver to get back to where it was back in 2011, silver prices would have to triple. You own silver mining companies, you're going to see more than a triple of your money. Or if you think, okay, say you just, no, Justin, the future is Bitcoin. Okay, you put your money in Bitcoin at, let's say 15,000 an ounce. No, let's say 20,000 to make it easy. That's it, it's all-time high. So if you bought in at 20,000 an ounce, okay, Bitcoin goes to 100,000. You made 5 times your money. Gold and silver. Let's say silver goes to its old high. It goes over $50 an ounce, where it was in 2011 before it crashed. These mining companies, seeing 5 times your money is not very hard. It's not going to be hard. And I'm going to prove it to you guys with what I'm going to make in these different miners. And so you always have to look at things in terms of risk and reward. But most people don't think like that. They just look at, it's the bandwagon effect and what everyone else is doing instead of just, no, there's too much risk in it. Just like when you're buying stocks, just because Apple's a really good company, there's sometimes it's overvalued, it's too much. But you go back a year ago, you should have bought Apple. Apple was a hell of a deal. When I bought Microsoft back in, I think that was 2012, a lot of people were thinking Microsoft was dead. I bought Microsoft at $23. And I don't even know what Microsoft's at now. I haven't been looking. I want to say it's at $70, $80 now. So things go in cycles, but everyone wants to do what everyone else is doing. It's like the herd mentality. It's dangerous. It is why most people don't make money in stocks or investing in general. People like doing things when they're in. People like to follow fads. They don't like to follow the beat of their own drum. And I guess that's the one strength that we have as libertarians in general. A lot of us have grown up, or since we've been libertarians, we have been kind of forced to follow the beat of our own drum, right? I mean, there's no one else who really thinks like us. Our guys never get elected. We don't start crying and bitching and moaning like the Hillary Clinton supporters. I mean, or the people who, when Obama was, elected back in 2012. Yeah, the exact same side, just flip it. The conservatives, they were crying and bitching and moaning. So everyone's caught up in things that don't really matter. With politics, it's all just a game, showmanship. And I guess let me just finish off with one thing here. I've talked about this stuff way more than I thought here. And just to tie back in with, we'll just end it here really quick. But I found this interesting. This is coming from the Wall Street Journal. And there's this little quote here. Listen to this. Goldman Sachs and JP Morgan expect U.S. fiscal deficits to rise to $1 trillion or 5% of GDP in 2019 from $664 billion in 2017 fiscal year ended September, or around 3.4% of GDP. So here we have, by 2019, Goldman Sachs, JP Morgan are predicting, okay, we're going to see the federal deficit go up to over $1 trillion. Then they're even saying, what I saw later here, where did I see that? That we could see yearly deficits of around $2 trillion in just a few years. And so the problem with everything that's going on, the government continues to spend more and more money we don't have. And the way I've seen as a way to avoid getting caught up in that mess is to own less dollars, to own less of a fiat currency that's going to get destroyed by these corrupt, incompetent politicians. That all they want to do is continue to play the game, kick the can down the road, blame somebody else, and try to appease some group so they can get reelected. That is the sick game that's going on. So I don't give a crap about either party. And if you want to prosper in 2018, for me, okay, please, I'm not some sort of financial advisor. You take this at your own risk. Gold looks like a fantastic investment opportunity right now here in the beginning of 2018. Could this be a false positive from what we've seen? Gold's up around 8% in just the last 30 days. It's possible. It could just pull back. It could just have another sideways year like it pretty much did last year. Actually, no, last year felt like a sideways year, 2017, but it still went up 12%. So if you think the dollar's going to keep going down, the dollar index is at 90. Just a year ago, it was at 100, 103. Back in 2007, back in 2011, Before gold and silver came way down, the dollar index was around 71, 72. So if you see gold and silver, I mean, if the dollar just keeps getting weaker and weaker as more and more people want to diversify themselves out of the dollar. So I don't know. I just see way too much risk investing your money in dollar-denominated assets, treasuries for sure, being in the bond market, and cryptos. You're playing Russian roulette. I mean, that's not a game I'm going to play. If I saw Bitcoin go and drop below 1,000, maybe I'd buy some just as a speculation, just for the hell of it. But at these levels, hell no, I ain't touching that. Okay, it goes to 50,000 from here. Okay, you made maybe 3 times your money. I'd rather make 3 times my money in gold, where the risk is so much less. And if you guys end up donating to my show, I end up sending you my bonus episode. I end up sending you guys my bonus episodes, and I recommend a few gold and silver stocks, a safe way to play it, where you're not actually owning miners that carry a lot more risk. I mean, there are definitely some really good miners out there, but there's also a lot of very bad miners. You got to know which ones to pick, because you could still, even if gold and silver going up in the first part of the rally, you could do okay. But then some of these mines, incompetent management, whatever. There's so many factors with a gold mine. It's like any other business. There's always risks with the business side of things. But as long as you see the asset going up, so that definitely helps. But still, you could get killed. But you got to know which ones to invest in. My bonus episodes, you donate over $50 to my show, I send you my bonus episodes, how to save money in Vegas, a few gold and silver stocks I strongly recommend, ones that in my gold portfolio, I own the vast majority of my gold portfolio is in those few stocks that I recommend right there. So if you guys want to help me out in that way, just go to justinmoreshow.com. More is spelled M-O-H-R. Just click on the PayPal link there, and I'll send you the bonus episodes. Also, you could join Tom Wood's Liberty Classroom through my link. A great way to learn more about economics and history, and just how to argue with people or understanding Western civilization and the history of what's been going on in the world. All that stuff there is at Tom Wood's Liberty Classroom, and I get a small commission back from that as well. And it's a way of help making you a smarter libertarian. So hell, that's a no-brainer too. And also, if you buy your goods through Amazon, buy it through my link. I get a small commission back. Costs you nothing extra. All those are great ways to help me out. So yeah, I'm flying out to Singapore tomorrow. From LAX to Singapore, it's like an 18-hour flight. I think that's one of the longest flights, or the longest flight in the world. For sure, for United Airlines, that is the longest flight. So that's going to be a fun plane ride. I guess I got things to read and things to do. So I look forward to talking to you guys when I return, and I'm looking forward to it. This is Justin Moore, signing off.